On Tuesday, the US stock market closed in the green. The Nasdaq outran the other indexes. The high tech is eager to regain losses, having rebounded by 1.4%. The Dow Jones closed 0.5% up, the S&P500 grew by 0.9%, and Wall Street seems to underestimate the gravity of the Omicron outbreak. Yesterday, 2.8 million people around the world were tested positive for COVID, the same figure as on January 7. In the US alone, another 670,000 people got ill yesterday, though the figure could be as huge as 1.4 million. Mass media report on problems in businesses worldwide due to high infected rates among employees. The number of admittances to hospitals stands at 140,000 in the US, so investors should be very cautious because the equity market could crash anytime soon. On Tuesday, the US stock market declined in the early American session. Later on, investors entered the market with long positions. The US major stock indexes were growing until the market closed. The highlight of the day was Jerome Powell's testimony at the Senate. In essence, the Fed's leader did not say anything sensational. He confirmed that the central bank would have to raise interest rates a few times, but his rhetoric was dovish. This supported the stock market, so futures on the S&P 500 went upwards. Today, the index is trading at nearly 4,713. The expected corridor is between 4,690 and 4,750 points. Notably, Jerome Powell's comments look especially dovish compared with the hawkish remarks from other Fed's policymakers. The Fed's chair awaited clarity on the timeline for monetary tightening, putting some downward pressure on the greenback. Thus, its index dropped to the lower bottom of the range between 95.20 and 95.80. Today, the index is not able to leave the established range, trading at about 95.61. Let's see if the US dollar will benefit from the inflation report that is due tonight. Obviously, the greenback's weakness pushed down the USD CAD pair. Importantly, oil prices are extending a rally in tandem with the US stock market. Oil prices have surged to the highest level since November 10. No wonder the USD CAD pair broke the lower border of yesterday's range, now trading at about 1.2553. The currency pair is likely to trade lower. We suppose it will stick to the lower bottom of the corridor between 1.2480 and 1.2600. The crypto market is also alert to statements from the US Central Bank. Amid the greenback's decline and growth on Wall Street, Bitcoin perked up. Today, it's trading higher at about $43,187. The price has approached the resistance zone of 43.5 and 43,700,000. The flagship crypto needs support from the US stock markets to continue a confident recovery. The daily chart shows that there are preconditions for Bitcoin growth, so the digital token is expected to recover to $45,000 in the short term. All in all, the testimony of the Fed's leader did not impress investors, so that they pushed the stock market up. Being a cautious policymaker, Jerome Powell is not going to speed up raising interest rates. Nevertheless, 80% of experts are certain that the regulator will have to increase the federal fund rate in March. Indeed, high inflation remains the main headwind for the US economic recovery. Experts estimate that global food prices have surged by a whopping 30% on a year. According to the CPI report released today, consumer prices leapt by the record 7.6% in December. Besides, the core CPI, excluding gasoline and food prices, rose to 5.6% in annual terms. The December data was higher than expected.